So I only invest into ETFs and not individual stocks, and in this video I'm going to explain why. So this is my trading 212 invest account, and if I scroll down you can actually see that there are some individual stocks, but there is a good reason for that. And the majority of my holdings, as you can see from this graph here, are in ETFs, and in fact just one ETF. That is how I prefer to invest. You know, everyone's personal finance journey is completely different. This is not financial advice. I also have many other portfolios with many different brokers, in fact most of the popular ones, and all of my investments are in just ETFs. So in my trading 212 invest account, currently I'm all invested in, or the majority of my cash is put into this fund here. Now this is in the iShares Core S&P 500. There has been serious volatility in the S&P 500 over the past few months, especially in the year beginning 2025. And historically, we have been expecting very good returns from the S&P 500. And a lot of this video will talk about ETFs as opposed to individual stocks, and also where the future of ETFs may be heading. Again, this is just my speculation and my opinions. It's just my finance. But as we speak, you know, the S&P 500 is very close to all-time highs. So how do I actually explain these individual stocks? All of these individual stocks were bought back in 2022, or maybe even at the beginning of 2023. So about 2 to 3 years ago, when I first started out investing, I actually just invested into individual stocks, because with individual stocks, there is a potential that you can beat the market. And if you can beat the market, why not? Why just take average returns? Now, this video will mostly focus on Trading 212. And if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, all you have to do is to click the link in the description box down below. Alternatively, if you've already signed up to Trading 212 in the past 10 days but have not received your free fractional share, then all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code, and in this section just enter my code JUBAIR and you should receive a free fractional share. So in April I actually sold out of all of my individual stocks, some which I've been holding for 2 to 3 years, even Nvidia, which was up by about 400 or 400+%. Now the reason as to why I did that was, first of all, the individual stocks in this account weren't actually worth that much. I wanted to tidy up my holdings and just have one ETF in both my invest account and my Trading 212 stocks ISA, which I might show you later because I have made a massive change in that. So now all that remains in my Trading 212 invest account are just stocks that are basically in the loss. I'm going to keep them now as I do want to loss farm. Essentially, I am going to make as much capital gains as I possibly can. I have many accounts with realized profits, and then I'm going to use these losses whenever I want to offset any losses so that I can stay under the capital gains threshold. As this is my Trading 212 invest account, this is outside my tax protected ISA, stocks ISA account on Trading 212. So I don't want to unnecessarily sell things off that are in a loss, because I can later use them to my advantage in different years. But anyway, this actually does highlight one of the reasons as to why I do not invest into individual stocks, and that is because you can see just by looking at some of these companies, for example, Moderna. So back in 2021, incidentally, that is when I actually started out investing. And I'm going to show you my original investment portfolio just to show you how bad the losses are. But you can see in 2021, you know, everything was basically overvalued. Moderna was close to $500 per share, which is absolutely crazy. And currently those same exact shares are worth $27. Now, obviously, I did not invest heavily into Moderna, but you know, in this portfolio, it is down by 70%. Now, you can chalk this down to poor decision making as an investor, but realistically there were enough people putting enough money in 2021 for it to warrant, you know, this increase in share value. Now, I've always hated the fact that people blame the investor instead of the company, but you know what, there might be some truth to that. But essentially, picking a stock that performs well is an incredibly difficult task to pull off properly. You really need to know when you're going to enter and when you're going to exit. Imagine people who had exited at the top, they would have been known as expert stock pickers. But I genuinely think that it has more to do with luck than actual skill. All of these companies, as you can see, are down. Even a company like BP, which is typically known as a cyclical company, where the share prices go through constant fluctuation. Today it is up and it probably will go up, but you know what? Even with a cyclical company, it's almost impossible to make guaranteed money with a stock because your entrance and your exit has to be timed perfectly. Also, with the tensions arising around the world, there is a reason as to why BP is up today. And the thing is, there will be another reason as to why it is down tomorrow. And the reality is you're never going to be able to predict disasters because they are completely random. Now, by investing into an ETF, for example, the S&P 500, this is by no means financial advice. This is just what I have been doing recently. I have invested in many ETFs since I started investing in 2021. I am not always invested into just the S&P 500, but the reason why I feel a bit safer, remember, investing is by no means a safe thing to park your money in. There's always risk. The value of your investments can go up or down. But with an ETF, I can rest a bit easier knowing that it is diversified over more than one company. For example, with the S&P 500, my money is put across over 500 companies based in the US. For example, big companies like Microsoft, Nvidia, Apple. Now, when it comes to exposure around the world, the S&P 500 does a pretty poor job because it is 100% based in the US. The 0.25%, in my opinion, is not even worth mentioning because realistically, it will be companies like Ireland, which for tax purposes is only situated there to avoid them. Now, as a thank you for staying this long into the video, I'm going to show you my original portfolio. Now, do remember that even though this is all a loss, I did make a few good decisions that did result in a bit of profit. But overall, overwhelmingly, these are all losses. And overall, in this portfolio, I do think I was either breaking even or at a small loss. So every company in this portfolio is down. AGM Holdings down by 99.52%. The original investment was around £900 and I am down by £8.90. Now I can keep on going, but you can see these companies have all done really bad. Aston Martin is down by 95%. Fastly, Scholes, Clover Health, I don't really need to go into them to show you how badly I am down. I am down by about £10,000 in this portfolio. Now obviously you can again say that I have made poor choices into investing into these companies, but realistically here there are so many companies and each company was a different sector or a different country, and many experts would have bought some of these stocks. So really what I learned from this experience was that, by choosing individual stocks, the biggest downside is that, the company could go to zero. Now with AGM Holdings, essentially this company is worth nothing from where it was. If I sell all of my shares now, it is worth £4.26. I can wait as long as I want, until the cows come home, but I do not think this company will ever recover. And that is the reality of investing into individual stocks. Some companies will never ever recover again. Essentially, what I think will happen is this company will become bankrupt. It will file for bankruptcy and the shares that you have will be taken off the platform and worth absolutely nothing. So since 2022, when I started out on Trading 212, I only invested into ETFs. The rest are actually free shares that I used to receive back in the day. And my approach to just investing into ETFs has made me a very happy investor. Now, this is my Trading 212 Stocks and Shares ISA. I opened this in April of 2023, so it's only been 2 years. And I have also transferred my ISA from InvestEngine to this platform. So in total, in terms of deposits, I've actually deposited £80,000 into this Trading 212 ISA. And over those years, I have grown my Trading 212 Stocks and Shares ISA to over £115,000, and this has solely been on the back of ETFs only. Now going forward, I'm not completely convinced that the S&P 500 will be the bearer of the majority of the gains in the world. And for this reason, I am thinking about investing into a new ETF. Maybe it will be this. Again, not financial advice. I'm still thinking about what it's going to be. I have zero loyalty to any of these fund providers, be it iShares, Vanguard, Invesco. The only thing I care about are the fees and the potential returns, so where my money is invested into. So something like an Allworld may be a good thing for me in the future, but I am still thinking about it, but I'm definitely very happy to be investing into just ETFs. Now, I know I'm hearing the argument that, by picking individual stocks, you can get a much better return compared to the market. And let's look at an example here. Now, personally, like I said, I completely believe that it's complete luck to be able to invest into a company with so much conviction that you get returns of 39,000%. 8%. Now, if you think that Nvidia is going to be the next big thing and you invest into it and it's your only holding, then yes, you will be rewarded extremely well. But like we have seen time and time again, companies rise and fall. And if you don't know when exactly to exit, you can get extremely burnt. The reality of the situation is that eventually Nvidia will be worth nothing. It will be replaced by something better. So buying and holding an individual stock, in my opinion, is financial suicide. So make sure to check out some of my other videos and I'll see you in the next video.